The mid-cap carnage which has been playing out, and one such stock which has cracked over 50% from its all-time high has been Dilip Buildcon. So let's try and understand with the management what's really going on, and is it just a part and parcel of the market carnage that you're seeing the stock as well fall? Because fundamentally, there doesn't seem to be anything wrong with this one. Rohan Suryavanshi, Director Strategy and Planning at Dilip Buildcon, joins us on the show right now. Rohan, hi, morning. A 50% fall. How does that go down with you? Because there are rumors doing the rounds. I don't know how much of it is true, and please refute that if they're just rumors, that there are some concerns with regards to auditors. There are some concerns with the balance sheet. What's going on?
Hi, Aisha. Good morning. First of all, thank you for having me on your show. Firstly, you asked me about the stock price. Now, honestly, that's something that I don't really understand or we as a company ever focus on. But what I definitely can understand is this is a market phenomenon. Right now, when you look at the overall, like you mentioned yourself, though there's a massive carnage in the small and the mid-cap space. And all sectors all companies in our sectors also have cracked over 40%. So 40-45% is also, irrespective of whatever, their concerns or rumors might be or might not be, whatever people may have said. But every company has cracked. So I think it's just a market phenomenon. I think sooner or later, this should be, there should be sanity in the market. And, so we wait for that. Now, as for the rumors that have kind of been circulating, all of them are false. And we've already clarified them on many occasions. As for the auditors, not just us, but even our auditors came out with a clarification that these are all false, and both of them submitted to the exchange their letter indicating their willingness and to continue. The balance sheet has been stronger than ever. These rumors which have been spread about us being, having a weak balance sheet, again, they're false. If you speak to any analyst who covers all the infrastructure stocks, balance sheet is actually amongst the top 2 or top 3 in the industry right now. And I repeat it again, look at anyone who says, who covers the sector, our balance sheet is among the top 3 in this.
Right. Rohan, hi. So you're saying that you've allayed those concerns, you've addressed those concerns, and they've been put to rest, but this is a market adjustment and it'll take its time. I just want to understand, have there been any institutional investors, and apologies, I didn't quite scan through your shareholding, but have any institutional investors sold out to your knowledge?
No, the big institutional investors have sold out to our knowledge in that sense. They all continue to be holding, I think, DBL pretty strongly. I think most of this what has happened is, I guess, all these HNI retail and a lot of the margin people who trade on margins, I think in this carnage and due to the change in the SEBI regulations and also us being put under AS, I think those are the things which have led to certain panic. And we've written to the regulator about why we were put under the ASM, but we've had a standard reply on that, and I guess the regulator takes these decisions from time to time, and sooner or later, I think once there's sanity, we should come out of it.
Okay.
Rohan, you've also got an analyst meet lined up, and in the light of all that you're saying, what is your line of defense going to be? Because I'm sure you're going to be questioned about whether or not there is strong revenue visibility for FY 19-20, what's going to happen to order inflows, and of course being questioned on the stock fall.
No, there is no defense for us from the analyst meet. What we are doing at the analyst meet is we are explaining to people how the industry has changed over the last few years, what has been happening, where is the industry currently at, where do we foresee it going forward, what has Dilip Buildcon been doing in the same time, how our business models might have been changing, the impact that it has on business, on P&L, on balance sheet. So we are just taking people through all of that, just trying to understand how the external environment is changing and how we as a company are coping with it. Basically that. Now, in terms of how our revenue is looking, all those are looking fantastic. I don't think so. Revenue has ever been a concern for us as a company, particularly because if you look at our track record, even in the last 2 years, we've almost doubled ourselves. From FY16, we were at 4,000 crores of top line. In FY18, we were at 7,700 crores of top line. So growing at that pace, at that size, is something that people have no doubt about. And the guidance that we've given for FY19 is about 10,000 crores, which is a growth that we've already demonstrated even this year. We grew from 5,000 crores to 7,700 crores, almost 2,700 crores of growth, which is again what we are saying in this coming financial year as well. So this is a growth that has been demonstrated. And once our quarterly results also start coming out, I guess all these concerns or made-up concerns will be dispelled. As per any other order book, I think order book stands at, as of currently, it stands at about 26,000 crores, which is about 14,000 crores of EPC orders, 12,000 crores of HAM orders. Again, it's in a very strong place. So this gives us an order visibility of almost 3+ years from our trailing revenue. And even this year, we hope to bag another 8,000-10,000 crores of orders at least. So we're not worried because there's a very strong order book pipeline coming out from the central government. 99.5% of our orders are from the central government, which has been ordering at a record pace in the last few years. So over and over, I think we are in a very good place for this industry. We are at the best. All players in the sector have about a 3 to 5 year forward-looking order book. Orders have been going at a very good rate. There hasn't been a lot of competitive intensity or orders being won at stupid rates. So we continue to be very, very positive on the order book, on the earnings that we should see in the next couple of years, at least, or 3 years, which we have visibility for.
Two concerns emerging when you speak to people who track your company rather closely or are investors as well. They're saying that, there is no denying that there is very strong revenue as well as order visibility when it comes to the Buildcon. But how is such a large company, which is growing at such a fast pace, be able to deliver orders on time? Are there any execution concerns? And what about debt? As you are, getting in more orders, the capex as well is building up. The net debt levels as well, I guess, would rise on your balance sheets.
So let me first answer the debt question. In the last 4 years, our debt has only increased by about 25%. But in the same time, our top line has increased 300%. So our top line went from 2,600 crores in FY15 to 7,700 crores in the same time. But our debt level went from 2,400 crores to 2,900 crores in the same time. So these concerns, what we have done in the same time, so what this means is become far more efficient with our working capital. We've become far more efficient with the days debt due days. So these concerns, while market may have them, they don't. Historical data does not support it. That we haven't been raising debt, at the same pace as it was earlier, or because we were in that growth phase at that time. We had made investments. All those investments are paying off right now. So even though we will still invest in equipment, we will still invest in our assets going forward. But we've also become more careful in terms of how we are growing. So debt, like I said, there is data. If you look at our balance sheet, this will prove. And what has that done? It has brought down our, like I said, working capital cycle to less than 100 days. We're about 95 days or so, which used to be much higher. So this is actually amongst the best in the industry. The working capital cycle that we are at is actually amongst the best. And if you do a thorough analysis of all the top players in the industry, like I said, we will be among the top for sure. Now coming to the revenue again, like I said, revenue, we don't see any issue. Our last Q4 was about 2,600 crores or so of top line revenue. And this pace will continue throughout there. We don't foresee any problem. While, there's always doubt. But we have time and again proved that whatever we say, we've committed every year. And you have our track record as well. Every time we've given you a guidance, we have gone ahead and beaten that guidance. And you have our track record for the last 2 years as well. So, I mean, while, doubters will remain doubtful about it forever, that data and...
We seem to have snapped that line with Rohan. It seems like the connection just went off. Okay, but clarifying all and every rumor really on Dilip Buildcon just ahead of the analyst meet. Thank Rohan Suryavanshi as always for taking the time out and speaking with us. And the stock as well has seen a recovery from where we started off the interview, completely rubbishing all the rumors with regards to balance sheet and auditor concerns, saying that there is nothing of that sort. They stick by with their guidance for revenue and there aren't any execution delays within their orders as well.